Is Evergrande going to be another Lehman Brothers type of event? If so, then wouldn't selling calls now would be a fantastic idea? Well, I kind of had that thought myself, but after thinking for a little bit of a while, I realized it's kind of dangerous to think that way, and here's why. So in this video, I'm going to cover my rationale, my plan of action, and some of the trades I did this week and the outcome of my $10,000 portfolio. Bear in mind, this is my own strategy, so copy at your own risk. So the first thing, don't mind, I'm actually reading off my script because I want to do this in one take. So let's start off with the mindset, right? So my mindset throughout this entire crisis is to really stay out of the market. And why? Primarily because I want to protect my butt, because I feel that this whole situation is very manipulated and there's a lot of inside things that are going on that I probably would not know anything about. The market is also very riled up, so the directional movement is going to be really strong, and yeah, so that's the main gist of it. But if you want a more in-depth explanation, watch till the end, for the YouTube algorithm. So for the next part, right, let's talk about some of my trades. But before we begin, I would like to give a very quick shout out to the crisis that's happening throughout the world. So I've been trying to give back to the community, and one way I've been doing so is by donating to help save Afghan lives. So when shooting and bombing happens, right, the Afghans literally drop their wallets, their passport, everything that they have, even their family, to flee for safety. And therefore, some of them literally become refugees overnight. So every $500 donated can help give a family shelter and food and water. So I hosted a sharing session with UNHCR, and I'm going to post the private link in the description below, along with the official donation page. So please private message me if you have donated so that I can track, and of course personally thank you, and to give you an optional shout out in my upcoming video. That's if you want it. My goal is really to raise $5,000 to be able to save lives, and that's really my goal, and every dollar helps. So thank you. Alright, so back to the video. So I'm going to continue with my trade. So on Monday, fear was at an all-time high. VIX climbed to as much as 25. During that point in time, I actually sold a very small position. I think one put on SPY, I think a $5 spread. I've mostly covered some losses because I had to draw down about $2,500 for my $10,000 portfolio. And on Tuesday, I mostly, the stock market was very bullish. I just covered a lot of my positions because I think that the risk is kind of high. And on Wednesday, I sold calls on Tesla, DIA, and then again I covered a bunch of stocks. I actually posted all of these in my Discord group chat, so that's the specific trades. I don't actually remember all of them, so just pardon me if I make a mistake. And the key thing to note is, why did I do such a trade, right? So I like to break it down into three different parts. The first part is what I know about this entire situation, the market situation, and the second part is what I don't know and probably will not know enough. And the last part is my interpretation of what happened throughout this event, or my stance, right? So let's just start with what I know about this entire event. So Evergrande Group, or Evergrande is currently the second largest property developer in China based on the number of sales they have, and they owe over $305 billion in debt. And that's US dollars, by the way, with approximately $110 million due this week. On Monday, it was the local debt, which is in yuan, and I think it's settled based on what I understand. But on Thursday, it's mostly US denominated. That one is unsettled. It's also very interesting to note that it's not considered defaulted because there is a 30-day grace period. So only after 30 days, then it's considered a default. Evergrande actually poses a systemic risk to China's financial system and is likely to spill over to other markets. We don't know the extent of how bad it is, but as of now, it's clear that they support over 3 to as much as 3.8 million people's jobs. So if they go out of business, that's 3.8 million jobs that we have to cover, or the government has to cover. So this deleveraging of the property developers has been going on for a while. So it's kind of different from the Lehman Brothers, which was kind of sudden, whereas this has been going on for a couple of years right now. So in August 2020, right, the regulators introduced 3 different debt ratios in a pilot scheme known as the 3 red lines. And Evergrande was hit really hard because it fulfills none of the criteria. So basically, if you don't meet these 3 criteria, banks cannot refinance your loans. and therefore this put a lot of pressure for property development companies to meet the guidelines. So that's when the deleveraging kind of started very sharply. In fact, it started as early as a couple of years, 2019, where the government listed Evergrande as a systemic risk. So since then, I think in September 2020, Evergrande has been discounting their properties as much as 30% to people to want to buy their properties in order to push sales and collect more cash upfront. And that didn't help much actually. In fact, they were struggling to sell properties because it seems that the property market is in decline. So what I could observe as well was that the market was very fearful on Monday. The VIX shot up to as high as 25, and we haven't seen that since 12th May, where there was a huge inflation fears in the US. But it seems at this point in time, people are somewhat still hopeful despite the sudden spike in fear, and then suddenly people became hopeful that everything would be just fine. Because based on Patrick Boyle, the bonds are priced to show that recovery will happen. So Bloomberg also said that the People's Bank of China has pumped in a staggering $81 billion in cash injection this week, highest since January, if I'm not wrong. So that's all the facts I know at this point. What I'm trying to drive at, just hold on a sec. Once we hear about what I don't see and don't know, then you kind of see the big picture. So what I really don't know, right, about all these facts is that how reliable is the accounting and the news sources that are coming out from China. So I think what I understand is that the Chinese market uses a very different standard of accounting, and their transparency is a lot lower. So that makes me doubt when they say that they have this amount of assets, this amount of cash. Can you really trust the numbers? That's one thing I am already skeptical about. And the next thing is, how deep is the rabbit hole, right? So it's not just it's not just a simple property development business. It's a conglomerate. They have other businesses that are simultaneously trying to raise cash, sell off assets, and what's even more complicated is the ties that Evergrande has with other companies in different sectors. So it's not just the property, but also the suppliers, the customers, how this will affect the broader market in general, such as, for example, since they're selling properties at a 30% discount and they are second largest by sales, what would happen if all the properties are selling cheap? Then people will start to realize, why not just buy from Evergrande instead of the competitors? And therefore, there's a downwards pressure in the property prices, which would then affect other property developers in China, right? So then, if one company goes bust, maybe everyone can handle it. But what if the second and third and fourth goes down along with the big guy, because everyone was kind of roped into this crisis? Not to mention the suppliers and other problems that are going to be apparent, right? So news is not very transparent, and personally, I'm also not very hardworking to go and dig into all the details, and that's why I make this one-take video. So bear in mind all the mistakes I make, because it's not transparent, and I don't want to have to try to research so much when I don't think the upside is going to be huge out of this whole crisis. So another thing also I'm not very sure in this case, right, is whether the government will bail out Evergrande. Even though they officially state that there will be no bailout, they can kind of support the economy, others from failing. They can kind of support Evergrande indirectly as well, for example, extending financing, because what I understand is property development, they are cash strapped. If you provide financing, I suppose they could get the job done and raise capital, but I'm not sure. I really am not sure. So, which brings me to my next point, which is I'm not very clear on expert in the complexity of the property development business. All I know is that it's a capital intensive business. But yeah, so maybe extending capital can help. Maybe it won't help even if you extend a lot of capital. But rather you need to restore confidence in the property market. So case in point is that I don't understand where the market will be headed in the next few months with much confidence, especially after the 30-day grace period. So then this brings me to how I kind of interpret the whole situation, which is I see a sudden spike in fear and a strong sell-off just on Monday, and often based on history I see a strong spike in fear usually leads to a rebound the next day, like a dead cat bounce, or maybe a zombie that's going to crawl its way back up, like the COVID-19 rebound V-shaped recovery. So that's why I think Monday was a good day to kind of nibble a little bit in puts. Then subsequently I think I wanted to sell calls, and I didn't sell on the index for the calls. I sold it on stocks which I think would do Likely won't do as well in both scenarios like Tesla, which I was wrong. Tesla apparently on Thursday, Friday just moon baby, so that was on me. I sold, I think, 785, 790 call spread. So now that's kind of losing money. But I think, who knows what's going to happen next week on Monday, Tuesday for Tesla. Another thing I am also interpreting is that I'm expecting, two scenarios. Number one, if a contagion happens, what's going to happen to my portfolio. And the second thing is that if the contagion doesn't happen, domino effect doesn't happen, maybe it can isolate it, what's going to happen to my portfolio. And from my thinking, I realized that the upcoming movements, or market movements, is likely, or my guess would be that they would be very large and directional. So the market, I believe, will go sideways and then go down sharply or go up sharply. Likely not going to stay flat, because this is going to be big news, right? So then, if there's going to be like large movements up or down, I don't want to be selling calls or puts either way. So back to the question, to some of you that have asked, hey Gerald, is it a good time to sell calls right now? Well, if you've just witnessed you've just witnessed a large movement on Tuesday, Wednesday, and you need to ask yourself, like, can your positions and portfolio handle another week of potentially such a large movement again? Not to mention the possibility of volatility expanding and therefore getting your sell options, becoming less valuable becomes more expensive and harder to close because the option premiums rose from volatility, right? So that's, in my opinion, I don't think it's that great an idea. And moreover, if you're wrong, right, you can't just simply roll over spreads, because spreads would probably be very risky. You may not even be able to roll over at a profit. Not to mention, options don't have holding power. So unless you're selling a single put, then okay, you own the stock and you have holding power. If you don't have holding power, then that puts you in a lot of risk. So in my case, I mostly sell spreads. So I can't go around and be very aggressive, and I'm gonna have to adopt, unfortunately, the chicken genius meme stance. Like he does the, So that's probably what I'm gonna do. That was fun. I'm gonna do that for probably a month or so, just to protect my downside. So that's what I see as the most trade. I'm going to be opportunistic, right? So that's what I'm going to be. So just an update for my $10,000 portfolio performance. This is my 10th week. I've been screaming that the performance of my portfolio is too good to be true. 50% in like 8 weeks is just ridiculous. And boom, $2,500 drop in one day. Right back at you. I was right. No, that's not cool. So kind of lost money, but I wasn't shocked because I was expecting a huge drop. So it's 16% drop, and it's ridiculous how much of the loss was because of volatility expansion. I actually had to cut some losses, and eventually, even with me cutting some losses, my portfolio rebounded to $15,000 by the end of the week, which is, yay. So yeah, moving forward, I'll be very light and opportunistic. If I see like particular stocks that are a very strong support, and volatility is extremely high, I can sell with a huge margin of safety, I probably would start to sell some puts or maybe some calls if the reverse happens. But I'm going to be selling only about 20% of the usual amount of options that I normally sold, because until I have a lot more clarity, right now I have no confidence that my portfolio can do well. I think I'll make a lot of mistakes. So I have no idea what to expect, and therefore be extra safe in my position. So now over to you. What do you think is a good play or good decision at this point of time? A lot of people I know are starting to buy stocks or started to sell a lot of calls, and you can see why this is already in contrast with one another. So I just want to know what your thoughts. Let me know what you think in the comment section below, or join the Discord group if you haven't already. And by the way, if you are new, I actually wanted to share with you that I also started a $10,000 portfolio, which I've been tracking for 2.5 months now. So I'm going to share with you the start of the video over here, or you can check out what YouTube recommends you over here, and I will see you in the next video. Take care, everyone.